Buy. Right now, just buy. Agents and lenders are saying, buy now, buy the dip. Is it really a good time to buy? Fed chair comes out yesterday and said he's gonna ease on interest rate hikes, which has caused the markets to rally. Agents and lenders are saying now is the time to buy. But should you buy? Is it a good time to buy? Is it smart to buy? Let's jump into that. Thanks for tuning in to the Good News Real Estate channel, where we talk about real, honest, current events in the real estate market and in the greater state of Idaho. And if you're new here and you like this video, after you watch it, please give us a subscribe. We try to push out this kind of content every other day. How did the markets react to Jerome Powell's announcement? Second thing, we're gonna talk about the dangers of buying now instead of waiting. Third, we're gonna talk about if you decide to get off the sidelines, what you should do to get the best deal in the housing market today. Stock market rallied. We had S&P 500 that jumped up 100 points. The Dow Jones jumped up 1,000 points, but then this morning it's already dropped 300 points. We saw that the interest rates rallied downward. A local bank here reacted by lowering their interest rates to 6.25 for a 30-year conventional loan. PennyMac, which is a national lender, they dropped their interest rates that they're showing to 6.125. But what's interesting is Open Door, they came out and they slashed 32% of their homes listed in our current market. They dropped those prices. On top of all of this, B of A comes out and they suggest that by the beginning of 2023, there's gonna be 175,000 jobs that are cut out of the labor force. So Jerome Powell, he comes out and some of the things that he actually said was wage growth is well above where it needs to be.
Nominal wages have been growing at a pace well above what would be consistent with 2% inflation over time.
And that they need to continually watch that. Second thing that he also talked about is they still need to be restrictive and do rate increases.
And the full effects of our rapid tightening so far are yet to be felt.
He says they may be moderate, so we might not see a 75 basis point hike. We might only see a 50% basis point hike. He's planning on holding this for some time until he sees substantial growth. He doesn't want to see this short growth and then they pivot, right? Some people are talking about a pivot, that the Fed is pivoting. Fed pivot is where they, instead of increasing interest rates, they actually are starting to decrease interest rates. But Jerome Powell gave no inclination, he gave no suggestion that they were going to actually decrease interest rates, but instead raise them moderately rather than excessively like they have in the past. Let's see what this Fed Watch tool says. At the Fed Watch tool, at the time of today's video, we can see that they are projecting that the Fed is going to raise the basis points by 25 to 50 points. 75%, 77% chance that they're going to raise it 25 to 50 basis points. There's only a 23% chance that they're going to raise it 50 to 75 basis points. Keep in mind that the new inflation report isn't going to come out until the day before their meeting on the 13th and 14th, where they're deciding how they're going to raise how much basis points they're going to raise it. On top of that, the next meeting isn't going to be until February of 2023. So there's going to be 3 months of no movement on the market as far as the interest rates go. What happens in December is really going to tell what's going to happen at the beginning of 2023. What are the dangers of buying a house now? Because there are some dangers that you should be aware of, but some people are wanting to get off the sidelines and buy, and we'll get to that later. Biggest thing right now, buyer remorse. Some of you may have heard it before. Maybe this is the first time you're hearing it. The previous video that we just did, we showed an example of somebody who bought a house in 2022. They now have it up for rent, and the reason why they have it for rent is because they wouldn't be able to sell it. They would be selling it for $50,000 less than what they bought it for at the beginning of this year. So people are getting stuck. So you have to be mindful that if you buy now, you could be in a situation where you're gonna have to be stuck in your house because you can't sell it. You might not be able to rent it to cover your mortgage payment, and so you're gonna be stuck there. So just keep that in mind. Another thing that you gotta consider, these agents and lenders that are saying, buy, now's the time to buy on a dip. An article just came out a couple weeks ago where 37% of these real estate agents couldn't make their monthly payment on their office leases back in October. We're hurting, right? Real estate agents, we are hurting because people aren't buying, people are staying put, people aren't selling their houses, or those who are trying to sell their house, maybe they aren't moving as fast as what it used to be. Just be mindful of that. Because if these 37% of agents can't make their office payment, how much longer is it going to be till they can't make their mortgage payment? And then what is that going to have that trickle effect in our economy as far as the housing market goes? If you buy a house now, you could have buyer's remorse. You might not have buyer's remorse. It's just something to be mindful of. Second is real estate agents and lenders who are telling you to buy right now. Some of them are having a hard time making their office as who's giving you this advice. Third, there could be major job losses coming in the first quarter of 2023. Just a couple days ago, I had the privilege of sitting on a forecast for the National Association of Home Builders, where they brought in a chief economist and what they project is coming, what some of these builders are projecting. So there's about 1,100 builders throughout the nation that were sitting on this meeting. And in this meeting, about 82% of them felt like we are going into recession. The chief economist said that 2023 is going to be a rough ride, but they're hoping that in 2024, things are going to turn around. So these builders are preparing for a rough ride going into 2023, whether that's stopping their production, not building anymore, or putting a hold on their building, trying to sell their current inventory, or even offering many, many incentives. At the end of the day, if you decide to buy, maybe because it's the right time for you, I just want to give you some very practical things on get you the best deal, whichever market you're in. Let me just pull up a couple things. One thing is we have a national builder here in our market. Right now, they're currently offering $30,000. Now, they're not offering it publicly on the MLS or anything. You actually have to dig deep to see if that $30,000. This subscriber got an extra amount of money to go towards their closing costs to buy down the interest rate into the fives. And on top of that, too, they were able to get the whole house covered in blinds. Just because they may not be advertising it doesn't mean that you cannot negotiate more. Look at vacant homes. Vacant homes have been sitting on the market for 30 days or more. Reason why, especially going into winter right now, nobody wants to pay mortgage on a vacant house, one. Second is going into winter, nobody wants to pay a mortgage on a vacant home in the middle of winter and try to season this, make sure their pipes don't freeze, make sure the house stays vacant and you don't get any squatters in it. Now, if it's a big company like Open Door, they're not going to be able to negotiate as much because there's big corporate things that they have to jump through. We threw an offer, lowball offer, just to see what Open Door would do. And when they countered back, they would only drop the house about $5,000 from their list price. Now, that may change as the season changes, but at that time, they weren't willing to move more than $5,000 on that house. So, or a builder that has a lot of inventory sitting on the market. A previous video that we talked about how you can actually go in and see how much inventory that specific builder has, what is their current list price versus their original list price, how much are they dropping, which helps you see how motivated they are to sell. The other thing that you can also try to look for is somebody who has already bought a house and they're trying to sell that other house, but they can't get it sold, so it's sitting vacant. Again, it kind of falls under that vacant category. But how you do that is you have your agent ask the other agent, hey, what's the reason why they're selling this house? Oh, they moved to Florida. They bought a house down there, so they got to sell this house up here. Perfect. Now you know that you have a bigger way of negotiating. And last thing, even though some people are still thinking that it's a seller's market, sellers might not be willing to negotiate, and that's okay. So when you go shopping, make sure you have one or two houses that you like and that you're willing to negotiate on, and then you can start using these two houses against each other as far as the seller, hey, well, my client likes this other house, but maybe we want to try this house first. And I just got to remind you, I don't have a crystal ball. I don't know what's going to happen. But this is how I feel like the market really is going. The market, I do believe that there might be a handful of people coming off the fence. There are still some good deals out there, right? We've talked about it before. There's sometimes a house gets thrown on, it's way underlisted. That's a good deal. And even if the market corrects 10, 15%, you're still in positive equity. Not very often, but that sometimes happens. Bigger question you got to ask yourself if you're wanting to buy is, are you okay when you buy this house, if you're stuck there for a couple of years, if you're stuck there for a couple months? I do think that our market is going to continue to go down. Jerome Powell made no inclination that he's going to start reversing rates and dropping the rates, but he's going to continue to climb them. And keep in mind, every 1% that the interest rates rise from the beginning of the year, that's 10% that a buyer lost in buying power. So back at the beginning of January, we were sitting right around 3%. We're double of what that is. So essentially 30% from the beginning of January to now is what somebody who is buying back then has lost in their buying power in our market. So I think prices still have a lot to come down to correct itself. But if you want to get off the sidelines, just make sure you're negotiating, you're doing your homework, and you answer the question yourself. Am I okay having negative equity on my house after I buy it maybe in 2, 3, 4 months?